John, I'd love to start off big picture,
Sure.
sort of where we find ourselves.
Okay.
You and I can mark the years down by our interviews, which I always enjoy, and we've done them for so many years now. But it does occur to me this last year, there's a lot of tumult in what we call the, for lack of a better term, old media world.
Right.
And I'm curious, given your experience, having been one of the founders of that world to a certain extent 40 some odd years ago, this ecosystem, are we at a point that's sort of unlike anything you've seen in the past?
Well, I would say the biggest change is the globalization, which was really empowered by the standardization of the internet. I mean, we never used to have a global footprint and global standards against which you could create software, hardware, services. We have that. And I think that probably is the most powerful impact. And then those people who have developed services that ride on that platform and that global ambition explode in size, the Facebooks of the world, the Amazons and so on, because they have this now interconnectivity that is essentially the whole planet. Mm-hmm. And the penetration of that is growing every day. And the sophistication of the services is growing every day. So I'd say in my career, that's the biggest change, is the denominator is up by at least a factor of 10 to 1 in terms of scale.
Right.
And what that does is it makes scale even more important in a media business where scale always was important. So it's all about scale. And it's all about, can Netflix get enough scale that nobody really can challenge them? Can they figure out how to use that scale?
How far along are they in doing that?
My own personal opinion, the only outfit right now that has a chance of overtaking them would be Amazon. And the reason being that Amazon has an entirely different monetization strategy. But Reed is a very smart guy, and he's not wasting any time. He's pouring the coal on the burners.
They're spending fortunes, and expanding globally at a much more rapid clip.
And he's been, God bless him, he has been successful in throwing Hail Mary passes and then growing into them. And I think he's going to continue to do that. He's got a great service.
Right.
He's disintermediating the studio industry by going directly to the talent and the producers ahead of the studios. So he's a disruptive force, and and he's kind of the first wave. And I think Jeff is going to be the most disruptive.
He already is. Bezos, you mean?
Yeah,
course,
as the Death Star moves into striking range of every industry on the planet.
There's not a conversation at this point that I have that doesn't end up with Amazon being the threat to your business.
Correct, because they have, if you're in the B2C business, if you're selling anything to any consumer anywhere on the planet, right, you got to believe that Amazon is going to have a look at that opportunity to commoditize you, to use scale to serve the public. So he's in the very enviable position of the winds at his back, because in effect he is a commoditizing factor. He's reducing the cost to the consumer and providing great convenience. So you just got to take your hat off and envy what he has built.
Everybody does.
It's a wonderful, wonderful construct.
I want to get to the end game here about those players with scale, but back to Netflix for a second. You had been arguing for years that the cable companies should have banded together, figured out a Netflix-like service. It's too late now.
It's way too late, but cable at one point could have done it. As you know, when I was DirecTV, I tried very hard to buy Netflix for DirecTV. Stock then was like $17, pre-splits, and Reed was pretty clear that his ambitions were to build a much bigger global company, and he was right to do that. Yeah. So, his scale, the ability to create content to scale, I mean, if you think about it, 3 years ago, HBO was the biggest, most powerful thing in the premium entertainment category. They spend, I think, $2 to $2.5 billion on content. They're now dwarfed.
Netflix will spend $8 billion next year.
Correct. And beside that, HBO is essentially only a domestic distributor. So they don't have the global platform under them. And while they can syndicate or sell their content to foreign distributors, it is not nearly as strong a business model as being able to know the customer, deliver the stuff directly, and control the pricing at which your product is delivered. So, and having all the information about the consumer and their habits, which in Reed's case, he's not using for advertising at this point, but he certainly can use that to optimize his programming. So I think he's done a brilliant job of building that business.
And scale will beget scale. It will only...
Scale is very, very powerful when you're producing something that has a high fixed and very low variable cost. So when you get to a point where your marginal cost is zero, profitability is enormous as you scale up. And he's on that track. So, you know, whether or not his stock is ahead of itself, I don't really have an opinion, but there's no question he's built one wonderful company.
I want to talk a bit more about scale in relation to a story I broke last week, which involved Disney and Fox.
Right.
And whether or not Fox does eventually sell its entertainment assets to Disney is unclear. But the very idea of it, that the Murdochs have embraced the idea that they can't get enough scale because Facebook and Google and Amazon and Netflix have just exactly what you're describing. What does that say about a traditional media company in this environment?
Scale. Two things, I think. One is that Disney, of all the guys in the studio business, Disney is the most unique in the sense that it owns its IP on its most important entertainment product. So if you think that that whole structure is going to be under stress, why wouldn't the Murdochs want to put their stuff in and ride along in something that they've helped make bigger scale and that has this protective element of intellectual property ownership, right? Between Marvel and Star Wars.
I don't know how they'd ride along, though. Now, maybe you could give them advice on how to tax advantage or make that deal work.
My guess is they would end up, that Fox shareholders would end up being Disney shareholders. In some tax-efficient structure.
Well, tax-efficient structure is very difficult here.
Not necessarily.
You don't think so? I mean, because that's what I've heard. You know,
there's usually a way, David. Sometimes it takes patience.
Well, nobody knows that better than you do. Nobody has structured more things.
There's usually ultimately a way to avoid corporate-level gain taxes on appreciated assets. So my guess is if they study it, they'll be able to figure that one out.
Does it make sense to you, the deal? And have you spoken to Rupert about it? Because you talked to Rupert, I know.
Scale makes a lot of sense. From a Disney, my understanding was this was initiated more by Bob than it was the other side. And if I was Bob, I would be looking at that because the crown jewel right at the moment for the U.S. would be Hulu. If he can get hard control of Hulu, sort of a government-approved collaboration of some of the majors, it gives him a jump start on a direct-consumer entertainment product. And then internationally, if he was to get the Sky assets in Europe and the Star assets in Asia, it gives him massive presence, a platform of content that has positive cash flow, big positive cash flow, and is great for promoting the leap to direct consumer. And ultimately, the challenge that he has in sports, right, where you know, everybody beats him over the head because ESPN, you know, is seeing subscriber reach drop the ability to have a massive global direct consumer business on the entertainment side with light sports and then transition sports over to it over time, to me makes a lot of sense as a solution. So,
is it too late? Did Disney move too late? Some critics certainly out there say this should have been done years ago.
well, when I look at it, probably when they licensed Netflix, I mean, if you really take the financial view, you would say when Disney was willing to move their exclusive product in premium TV to Netflix, Netflix was on paper bankrupt, and yet Disney was willing to take their creditworthiness without getting any equity on I think it was a 5-year contract, right? So if you want to be critical, you would say Disney could have taken advantage of Netflix and gotten a slug of equity, gotten their foot on it, let's say, at that point in time, and they didn't. So that was either because Bob was feeling merciful, or he didn't really see how big this thing could become.
Right.
I don't know which, but definitely, in that space, Disney is the big player.
They have the ability still to be able to play with the biggest boys.
I think they do,
scale.
and you could see that. Look, they took the position in BAMTech to give them the technology, a technology base that could go direct consumer. They have great consumer brand recognition. Probably nobody has better on a global basis. They don't have the content quite put together on their own.
Well, and that's why Fox would
to launch on a worldwide basis,
right.
And that's why Fox would supplement it. And so, yeah, no, I can see the logic of it. If I was, there's two ways if you're sitting in Rupert's seat, there's two ways to look at it. One is, they can pay me a premium and I can get a ride on their platform where I'll benefit from global scale. And I won't be running as much, but what I'm not running will perform better than I can make it perform. And meanwhile, I can focus back on my defensible boundaries.
Sports and news
in the U.S. with a broadcast network. And that's a defensible U.S. Business where I don't have to worry about global scale, right?
Right. To the extent that
sports is local, news is, local in the sense of national.
Yes.
News is national. He's got a very strong and defensible position in that
world. Conceivably, he could get it together with News Corp again and take the whole thing private. I don't know.
And he's not at a scale disadvantage.
Right.
Okay? So whether he rides along with a more scale efficient platform as a co-owner, probably the largest single shareholder if he wanted, or if he wants to take the capital out and, as you say, double down on his own domestic business, he would have that optionality. So to me, it's a logical thing for them to be studying.
Right.
I'm big on looking at every combination. It's all a Rubik's Cube, and not everything fits, but you want to consider probably every combination when an industry is in as much transition as our industries are.
But if a Rupert Murdoch is making that decision to the extent that I can't attain the scale I need to be competitive without doing this, doesn't everybody then need to be considering that? If you are, I can go through all the names of other than Disney. Every single one of them every single media company.
Subscale.
Yeah, is subscale.
Not only subscale, but their functionality is being challenged.
NBC Universal, I guess, sort of fits in a different part of that. I don't know.
Well, Brian has enough strong distribution muscle that they can be protected to some degree in the U.S. by the distribution balance that Brian has built. And keep in mind, NBC Universal is, as a practical matter, Brian generally and NBC Universal, Comcast, the whole collection is almost the most domestic company in our industry,
Right.
the least international. So it's, in a sense, keeping the focus domestic is a more defensible boundary. But Universal Studios definitely would be under stress, but keep in mind he's part of Hulu.
Right. Right.
So if he has an outlet for his product to a Hulu, and you have a Disney that's going to drive Hulu globally, you know, that may be sufficient scale for his content creation that he doesn't have to go do it independently, that he's riding on another platform that will provide economics and scale.
Before I asked you about Brian, though, you said something about a functionality deficiency, essentially. What did you mean by that amongst these companies that are subscale?
Well, most studios are essentially funding mechanisms, promotional mechanisms for ideas that they don't create. So when you have the Netflix and the Amazons going to the idea creator and saying, you don't need those guys, right? Mm-hmm. We'll fund you, we'll support you, we'll promote and market you, and by the way, you don't get to keep any of the rights, right? It's a change in the historic function of what we call studios,
Yep.
right? And you know, a number of studios got their back up 2 years ago when Netflix started wanting to would pay more, but they wanted more and more of the rights, less and less retained rights by the studio, and some of the studios even refused to sell to Netflix for that reason, because they saw that we're just going to become a factory, and then our factory function can even go away because we really don't even own the factory, we license, you know, right. And so I'd say that whole food chain, you know, is under some restructuring pressures.
So what do you do? I mean, let's bring it back to a company that you own a significant economic stake in and a larger control stake, Discovery.
Yeah.
What do you do if you're Discovery? You do the Scripps deal, you expand domestically, but are you still at that scale disadvantage or not because you're global?
Well, yes, I think Discovery did two things that most other guys in the space didn't do. First of all, they went global, big time. More than half the revenue is offshore, and they're in, I don't know, 1.2 billion households watching their stuff. They have a good brand recognition globally. Number two, they're not really in the middle of what I would call the scripted programming food fight, right? Where the costs are going through the roof, where the number of scripted television shows, movies, is going through the roof. It's very tough in that space to be financially successful, and particularly up against the guys who are now becoming so large. Discovery's more over here in the non-scripted programming, reality programming, documentary programming, personality-driven. And so David is not seeing his production costs, you know, going through the roof, A. And B, he owns all of his content.
Right.
He doesn't just license it, he actually creates it, produces it, and owns it, all rights and all markets.
And it's portable across borders, as he would say many
Correct.
times.
So if you look at Scripps, first of all, big synergy. Second of all, relatively cheap, free cash flow engine. You know, if you buy, post synergies, if you buy something that's generating a 12% cash return and you buy it with 3.5% money, right? It creates a lot of free cash flow, David, you know? And it gives you market power in the US, okay, with advertisers, because you now have a bigger percentage of the audience.
Right.
Now you have this attrition going on as the big bundle, as people are quote unquote cord cutting, but what they're really doing is going from the big bundle to buying connectivity services and going out and figuring out where else to get their content, right? And so as that process continues, Discovery needs to make sure they're in every small bundle. They have to make sure that they're in a position to transition to direct consumer platforms, either their own, which they would be the core of, or somebody else's. And that process is underway.
Ongoing.
It's an ongoing process. It's underway. And so, I would look at the positive of Discovery is in they're in a great position to go direct consumer on a global basis. Outside the U.S., they're in very good shape because you don't have this big bundle coming apart phenomenon. Video in Europe is cheap,
right,
compared to video here. So you don't have that sports pricing pressure in Europe, and where even in the UK, where sports is expensive, it's an a la carte service. It's not bundled in with basics.
Right.
So you don't have people saying, "Oh, this is getting too expensive." If you don't want the sports, you don't buy the sports.
But John, the market has hated this deal, and the stock has just been getting crushed.
Look, David, most of the money I've made in my life has been when other people don't like what's going on. When things are cheap, that's opportunity.
So what is the market missed here? The minute they announced the Scripps deal, that thing started going straight down. It only exacerbated.
Let me explain a little of short-term market phenomena.
Okay.
First of all, in this world, what have you done for me lately, right? So when you get a whole bunch of investors who are dependent upon the company doing periodic buybacks in large volume, and that becomes sort of an addiction, and the investor, the young man who's making that decision turns to his boss and says, "We got no downside risk. The company's got a lot of free cash flow and they're soaking up the stock." So how bad can it get, right?
Well, it can get bad because you're not reinvesting in your business and you're buying your stock at highs that you shouldn't be.
That's the long-term view. I'm talking about short-term mentality, right? So when a company like Discovery that's been on the track of massive stock buybacks with its free cash flow goes out and buys Scripps, and part of the deal is we're going to have to suspend the buybacks for a period of time because we want to borrow the money. It's a 70% debt deal, right? We want to be able to borrow the money at investment grade rates, which were very attractive, sub 4%, long money. If we're going to do that, then that's important, right? We don't want to junk the company, because we don't want to pay a lot more money for interest going forward. So we stay investment grade. The quid pro quo with the rating agencies is, okay, until your debt ratio drops below 3.5, let's say, you agree that you won't do any more buybacks, right? So all of a sudden, you got the investment community saying, "Oh my God, they're not going to do any buybacks." Okay, so people who feel like they don't have that support, right?
So you don't think it's a function of investors, into our conversation about scale, feeling like Scripps simply does not answer that question in terms of scale domestically, and they won't be able to do a direct-to-consumer offering that really is robust enough?
It depends on how you phrase the question. It gives them great domestic scale, okay, in the historic space, right? It gives them personalities. It gives them throw weight in the advertising community. It actually gives them leverage with their existing historic distributors, right? Because now you got 20% of your viewing audience is watching this stuff, and this stuff is cheap in terms of affiliate fee per eyeball. Those are all positive things. And Scripps is one of the cheaper historic services, affiliate fees. You got huge synergies in putting these companies together. So you're buying something that already has a lot of free cash flow, okay? The synergies are going to add a lot more free cash flow. If Trump's tax thing gets through, all of a sudden the tax leakage goes down.
We'll talk about that.
This thing becomes, on a run rate basis, a cash flow monster, a huge free cash flow. So they would be able to get back to investment grade leverage quickly, okay? Some people are skeptical.
Some are skeptical.
Okay? Now, you also look at it and say, outside the U.S., they grew almost 10% EBITDA this year. I don't see anything negative going on outside the U.S. Inside the U.S., I think they grew 5% this year, better than any of their peers, right? So I look at it, and to me, it looks cheap.
You going to buy? You buying more?
Well, I would possibly buy more.
You would?
Okay. Yeah. Now, keep in mind, when you're an insider, you have all these rules and windows and...
Understood, but you seem to certainly be articulating a point of view that says this is a time.
For me, I'm always a long-term guy. And I'm going to bet that Discovery, with its ownership and control of its content, okay, will be able to transition to direct consumer platforms in a reasonably efficient way. Okay? And if they successfully do that, then they are dirt cheap right now. If they can partly get there, they're still cheap.
Right.
So, and you know David quite well.
Yes.
I have a lot of confidence in David and his team, and I think that they will figure this out. And I think Scripps is an important piece of that, because I don't think the scale throw weight of Discovery's content alone was sufficient. I think with Scripps, they're much closer to being the gravitational center of the non-sports independent content guys.
Okay.
And so, I think they got a good shot. There's no guarantees.
There are never any guarantees. I want to move on to some other, since there's so many different companies to discuss.
Yeah.
In fact, 13 different companies that you're deemed to have some level of control.
That's right.
Significant level. Let's talk about Charter a bit, John.
Sure.
Talking about the long term, and I know this from experience, you give your managers, so to speak, and obviously Rutledge is a bit different than Zaslav in the sense of your control level, but you give them a lot of leeway, you're focused on the long term, but SoftBank and Masasan has been, I know he visited you at Sun Valley probably a number of times.
He was very visible, wasn't he? Sometimes that visibility has a message just all into itself.
It does.
But let me say about Charter, the reason I made the investment in Charter initially, right, was Tom Rutledge and his management team. I think he's a terrific manager. So, we had an opportunity to come back into the U.S. We bought the initial position from Apollo. And Tom had a very clear vision. He's executed flawlessly on his vision. We had this huge fight where Brian was our friend, then he was our enemy, then he was our friend, then was our enemy. But we ended up with Time Warner and Newhouse into Charter. Massive operational challenge for Tom and his team to integrate and take over and change essentially the philosophy of a company 4 times as big as they were, Right. And he's doing it, and it's working. So I have absolute confidence in Tom and his team. At the Liberty level, we're out there. We're shareholders, investors,
economic animals,
and so this is the good news, the bad news. The good news is we've had at least 3 or 4 approaches by credible companies who had ideas about how some relationship between them and Charter.
I think Verizon, Altice, and SoftBank certainly would be 3
on the list. Yeah.
On the list.
So, the fact that people have an interest and see big synergies, okay? The fact that they know I'm a believer in the consolidation of wired and wireless networks, right? So.
But Rutledge is not. He doesn't like Sprint.
No. Back up.
Okay.
Tom believes, as Brian believes. Go interview Brian. They both believe that ultimately we have to supply wired and wireless connectivity.
Understood.
Now,
so I may have expressed that incorrectly.
Correct. Now, both of those guys and me, we all believe it's a terrible business. Okay?
Right.
It's like the airline business with overcapacity. So it's no place to go invest a lot of money and hope you're going to get a good return at this point. If you're a cable guy and you say eventually I need to be there, but in the short run, in this food fight that's going on, what assets do I bring to the table as I start to go into that space? and number one thing is convenience to our consumers, one-stop shopping, seamless, which we can do with an MVNO. And in fact, Brian had negotiated a wonderful MVNO with Verizon, perpetual, good terms, cost of transport floats with retail. So it's really a very good deal that Brian has done. So the idea of deploying wireless using Verizon as the carrier, right? You're starting with the best
network
brand, the best network, in a lot of ways the most simple approach. And you start developing it that way, and you build up and you learn and you provide that service to your customers, not expecting to make a lot of margin, but expecting to reduce churn, provide convenience, and learn, right? Now this is a process we're probably 3 years further along in Europe, okay, than the US cable operators.
at Liberty Global. You're
At
talking
Liberty
about.
Global.
Right.
Yeah, if you look at Liberty Global in Europe, we're 50-50 with Vodafone in a converged network in Holland. We started with an MVNO in Belgium. We ended up buying out the number 2 network, and so we're now experiencing the synergies of consolidating the network. So this is a learning curve.
Right.
And I think in the U.S., the thing that makes me feel the best is that Tom and Brian are working together, okay, in figuring out the entry of the cable industry into the wireless space. And that is wonderful, okay, from my point of view.
Understood.
As an investor.
I just want to get back to the track of Charter itself and Rutledge and Massa and all of that.
So a guy comes along and he talks to us. He talks to Greg, right?
He talks to Greg and he says $540 cash in stock, but we're going to value Sprint at a lot more than the market's valuing at. So the back end is not worth $540. But don't you go, well, all right, Tom, talk to him.
Well, we did.
And what did Tom say?
But we started by saying, okay, Massa, you've thrown some concepts at us, right? First of all, some of the concepts you've thrown at us, might work for Liberty, but might not work for everybody else, okay? So you have to understand, in our relationship with Charter, I call it a 3-tier situation. First of all, we have our holding company that owns 21%,
Liberty Broadband.
22% of Charter indirectly, okay? Then we have a partnership with Newhouse, right? So if Massa comes and throws a proposition at us, right, then we go talk to the Newhouse guys. We say, well, we've studied it, we don't know, what do you think? It's one of those, right? And if they think it's worthy of further look, okay, then we both call up Tom and we say, hey, Tom, would you meet with these guys? They got this pitch, they got this, they got that, right? And so far, and this has happened with, as I say, 4 different approaches.
I don't know who the fourth is, by the way. I only got 3
I'm
of
not
them.
going to tell you. But the problem is that none of them at this point have made a pitch that was worthy of bringing it to the board and proposing it seriously to the board, okay?
Why not?
Well, simply because some of them, when we look at Charter as a standalone, and we look at a projection of what we think the next 4 or 5 years are going to look like, and we value that, we come to some sense of value, okay? And if these other propositions can't get us substantially beyond that value on a risk-adjusted basis, then, why would you be interested?
Something that starts with a 5 in front of it for a stock that right now is trading at $340 would seem to me to be potentially compelling.
Well, yeah.
For a capitalist like you.
Where's the check? Okay? Is Massa talking about a $540 check?
No. He's not.
So,
what about the Altice guys?
So like I said, when you value.
Yeah.
Now, with Altice, if Patrick wants to come and offer us a huge premium, his stock our stock, right, then in effect we're buying Cablevision at a discount.
Right.
That I would be interested in. Patrick, on the other hand, is not interested in giving up control of his empire.
And meanwhile, with his stock, what's going on with his stock lately?
It's gone the wrong way for him lately. But yeah, there's a lot of synergy between Cablevision and Charter. And Patrick bought Cablevision while Charter was still all tied up in Time Warner. Otherwise, maybe, Tom used to run it.
Yep.
So, all of these things, I mean, part of the problem, and the reason you get rumors, is because we're open.
Yeah, sure. People want to come
anybody
talk.
who's credible, we're happy to talk about almost anything.
Right.
Right?
But it doesn't mean...
And that starts rumors. But it doesn't mean that we're anywhere near a deal. And, the last time there was a board discussion and sort of a sense of the board on this stuff, it was unanimous.
It was unanimous, right. In
Yeah.
other words, saying no interest or...
Saying no interest in this conceptual
Is there
deal.
something that could change in terms of the performance of the company?
Sure, Lowell could lose his mind and offer us something that he can't really afford.
Well, he can't if he wants to stay investment grade or...
No,
keep
you
his
know what I
dividend.
mean.
I do, of
No,
course.
I mean, these are all subject to limitations.
But what about on the Rutledge
But this
side?
is all driven by the fact that we believe we have a wonderful business and a wonderful business plan that Tom has just started to exploit. So if you believe that you've got a high single-digit grower in EBITDA, and you have a leverage philosophy that you're going to keep that cash flow levered, and you're still running under a big NOL, right? And you just project any kind of fair multiple for your cash flow 4 or 5 years out, you end up with a number up here, okay? And you're not taking the risk of trying to fix somebody else's business, right? You're not running the risk of being over-levered, right? You don't have to change control relationships. So the point is Charter for sale? Anything I'm involved in is for sale every day of the week. The store is always open. Have we seen anything yet that gets even close to ringing the bell? No. Does Masa have the resources, if he wanted to ring the bell? Yes. Okay.
He certainly thinks that the numbers he's put out there were enough to get Tom's attention, but apparently
No,
not.
the numbers he put out were enough to get Greg's attention. Because what Masa was talking about was a much better deal
For you guys.
for some of us than for everybody.
You'd roll in, you'd get some sort
And
of CDR or upside.
So unless there's a proposition that is good for everybody, I can't go take a transaction that's good for me, good for my 21%, or even us in Newhouse is 34%, but bad for the rest of the shareholders. Can't do that. I couldn't vote for that as a director. For one thing, I'd be conflicted right off the bat. So no, I mean, what has not yet been presented is something that is fair and good for all shareholders, and better than we believe Tom can deliver on a risk-weighted basis.
Okay.
So, the door's open. Masa has plenty of resources. It's just, at this point, nothing has been proposed yet. And, the challenge, you don't just take the number 4 cellular business, fix its problems, okay, in the context of where you're trying to integrate this huge other company where you're only partway there. I mean, there's a lot of risk associated with that and a lot of capital to spend.
Needs to be.
Right?
Time Warner AT&T, the government conceivably going to try and block this thing. Any reaction to that?
Well, I would say a month ago, I gave it about 100% probability of getting done with behavioral agreements, right? I mean, I was quite surprised to see that divestiture was proposed or offered. I still think they'll get it done on behavioral agreements.
You do, because the government seems poised to bring an action here, even though
but I would
most
put
people
it-
say it goes way out there in theory in terms
Yeah.
of
Today,
antitrust
I
law.
would be 75%, of it getting done,
getting done.
on the current terms, without divestiture. So I still think these vertical deals generally get done. But I frankly, I have not read what the government's case is. I had expected that they would do remedies similar to what Comcast did when they bought NBC
That's
Universal.
what many people anticipated.
Right. And if you look at the parallel situations, and the only thing that I could say is I know that there was rumbling when we were friendly with Comcast and trying to do the Time Warner deal. It was thrown back that some of the professionals at Justice felt like Brian had not honored some of the behavioral, or didn't feel that the behavioral agreements were sufficient.
Yes, that seems
to
to be
control
part
behavior. And so, it's you always look mean and tough if you do divestiture. So that's all I know. I mean, I really don't know.
No, I just want
but
to
I
get
do
your
expect it. I expect it will happen. And I think what's really interesting is that AT&T, whereas 3 years ago HBO was the biggest thing in the space, now it's subscale and domestic only. And so what does Randall do, with that asset?
Which is still the crown jewel to a certain extent.
Which is
but
still
it's
the
not.
crown jewel. Yeah.
Staying in Washington for a minute here, tax policy, obviously something near and dear to your heart.
Yeah.
The estate tax may go away. Does that change any of the plans and things that you've spent years putting together?
Well, I think the odds of the estate tax actually going away are slim and none.
You do?
I do. I mean, I think it was put out there by the House as like the carrot that you can't ever reach 5 years out, right? They did up the exemption, which I'm sure is great for people with medium-sized farms and businesses. But I certainly, in my planning, I'm not counting on there being no estate tax. Now, yes, if there was a change in the estate tax, then our estate plans would change, right? But, how dramatically, who knows?
Yeah.
So you always have to be adaptive to what the government does. But on the broader question, look, I'm 100% in favor of what they're trying to do on the corporate side. I think America really needs to reinvigorate our industrial base. Tax law would be a big help. It's not sufficient. It's important, but not sufficient. We need training programs, apprenticeship programs. And I don't think we can fix the income distribution problem that we have in the middle and lower classes in this country with the taxes. It's very hard to cut people who pay little or no taxes. It's very hard to take care of their financial situation with taxes, by cutting taxes further. We really need, it's all about supply and demand for labor and productivity. And so you got to go straight at those issues, in my opinion. So, Trump is right. Yeah, Trump's right to hold down immigration because that's supply. And he's right to try and reinvigorate industry in America. And he's right to go put pressure on trade imbalances, and if we could add an improvement in the educational system, then I think we would have a formula to make America great again. But
John,
without touching education,
you're not going to do it.
I don't think you're going to get there.
The music is building here. You've got to go, but I want to ask one final sort of broad question.
Sure.
We sit down and do this interview every year, and
Right.
we talk about your holdings, Liberty, and so many other things, although we don't get to a lot of them either.
Right.
When you think about sort of what you've got to come in terms of your life and your expectations, is this where you want to be? Do you ever think that, well, you've said everything's for sale? How do you think about it?
No, everything's for sale. That's my duty as a director, right, of a public company. That you can't say, no, I love this one, I'll never sell it. I think that's wrong. If I have public shareholders, I have to be in a position of saying, if somebody will pay more than I think I can make this thing worth, I owe it to my shareholders to accept and negotiate a deal. So, I mean, that's just nature. Personally, you know, I've become more philanthropic. I'm involved in a lot of different charitable efforts. Some of them are very much in education, some of them are in health.
And you're going to keep doing that? And
Yeah,
sort of.
yeah. Well, and under the current estate scheme, you know, our wealth will go into foundation forum, and we'll pursue health and education goals. And that's kind of what we do.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.